Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the second week of February, as you can see, starting from 17th of February 2025. Before starting the weekly breakdown, let me show you the news. So when I'm looking at the news, Monday there is no news, Tuesday there is GBP climate count change, and New York session there is no news. Wednesday there is GBP CPI, and also New York no news again. Thursday there is unemployment claims. Friday there is retail sales, GBP retail sales, and the whole day there is news. So it is a very highly driven news week, right? So my bias going to the next week on the weekly, the most important thing I look at the weekly is the previous weekly candle, and according to that I decide my weekly profiling, weekly bias, right? So my bias going on to the next week will be bullish, and this will be my targets. So if my bias is bullish, Monday, Tuesday goes down, sweep some sort of liquidity here from some sort of liquidity in the lower time frames, and then on Wednesday, Thursday can go up. That's the weekly profiling, and that's what I will be looking for. And if I go to DXY, the same sort of opposite thing is true. I am looking for sales because of how this candle closed. It was clearly bearish, and Monday, Tuesday to go up and then go to the downside, so on and so forth, right? So my weekly bias is clearly bullish, so anything that's aligning with the weekly bias I will trade. So here, right, so my weekly bias is clearly bullish on GBP USD, right? So according to how this Friday candle closed, my bias for Monday, with the weekly and the daily I use it for bias selection. So according to how this Friday candle closed, buying on Monday doesn't make sense for me because of how this Friday candle closed. There is a huge fair value gap here. There is a bearish pin bar here, rejecting from some sort of, finding some sort of resistance here. It is not a strong zone, to be honest. Yes, the price makes sense to go up to the supply and then reject, yes, obviously, because now it's rejecting out of nowhere. You can argue it swept this liquidity from 20 December right here, and then it's rejecting, but I don't consider that. I need an order block. So in this case, literally on Monday it made sense to sell to fill up this fair value gap, but I don't trade Mondays whenever the weekly and the daily bias are not aligning. I have also written it here. Where is it? Here we directly didn't trade it on Monday because the daily and the weekly bias were not aligning on Monday. Simple as that, right? So that's exactly what I did. So Monday I didn't take a trade, because if I took a trade on Monday, I can guarantee you for a fact I would look for a sell to fill up this fair value gap, and it would have been a loss. So not trading on Monday was a good decision because it gave us our bias for Tuesday, and also our bias was not sure on Monday, right? So also DXY now is a very low volatile candle right there. So GBP USD, we can clearly see Monday closed as a bullish candle. So according to how this candle closed, now I will look for buys on Tuesday. Here we can see on the 4-hourly time frame, this is the higher low, this is the higher high. So the price is still trading between this bullish solidified range. As you can see, the price accumulated here, went up, manipulated the previous week high. The previous week high has already been swept, and now we can look for a buy. Or now I'm looking for a buy. On Tuesday I will be looking for a buy, and if I'm looking for a buy, I will look for some sort of demand zone. And there was a demand zone here on the M30 time frame, as you can see right here. I waited for the Asian range to close. The Asian range closed perfectly. The demand zone also got mitigated perfectly, right? That is when I go to the lower time frames, and this demand zone was valid because it was made in London session, as you can see, and also the New York session here was this is also a demand zone, but I marked this London zone because they were very, very close. And yep, I anticipated this New York to be previous structural liquidity and then go towards the upside. So now the Asian low liquidity got swept. The higher time frame bias is bullish. A point of interest got mitigated, and the Asian low liquidity got swept, and then we got a change of character. Is it in our session? No, this is not in our session, right? Look at this. The Asian low got swept at 6 a.m. UK time or 6:30 a.m. UK time, right? The price went up, swept liquidity. This is exactly what I want to see on the M5 time frame. So on the M5 time frame, the change of character didn't happen impulsively, to be honest. So this trade I would have not taken, I believe, because the change of character was not happen impulsively right here. I wanted the change of character to happen impulsively, but in this case it didn't, so I didn't took this trade. Simple as that. I didn't took this trade. If the change of character happened impulsively and at my time window, then I would have taken this trade. I follow my rules, I followed my plan right here, and I didn't took the trade. So on February also, we know that it was not one of the best months. We didn't got our setup usually. So if I took this trade, it would have been a winner, but in this case I didn't took it, so it is what it is. So it was a no trade day for me. On Tuesday also the price went down again, mitigated the demand zone, induced this position right here, but at this point in time my session is already over. I trade 7 to 10 a.m. UK time, meaning I only enter the markets from 7 a.m. to 10 a.m. UK time, so the time was over and I didn't took the trade. But New York session did give the move. My bias was still bullish. I could have taken this trade on New York session. As you can see, the price went down, right? The price went down, right, lower low, higher high, higher low, higher high, higher low, higher high. So New York session gave us a change of character to the upside, and then we could have entered at the OTE, or you can also argue the equilibrium with the 8 pip stop loss right here below this, and then we could have targeted a 1:3 easily, and this trade would have been a banger. But yeah, also whenever the London session doesn't give you the move, there is always a high chance that New York session might give you the move. So this was exactly what I have seen on the markets. And now going on Wednesday. So Tuesday was a very tricky day for us to trade. Sorry, not very tricky, obviously what I'm saying. Tuesday was a bullish day. Now going on Wednesday, again my bias is still bullish because there is no reason for me to look for sells now. Yes, there is a fair value gap to the downside. Yes, this fair value gap has high chance of getting filled somewhere in time, but until now it doesn't make sense for me to sell. That is when I go to DXY to confirm my bias. So DXY was also looking like a bullish candle. DXY is looking like a bullish candle on Tuesday, and is looking like a bearish candle on Euro USD, and also looking like a bullish candle on GBP USD. So this is when I don't trade. I don't care if a class setup appears. I don't care anything. My higher time frame bias is not clear. I don't take the trade. On this day, to be honest, if I was trading, I would have happily traded Euro USD. Euro USD is clear, right? But GBP USD is not clear on this day, so I would have not traded GBP USD on this day, on Wednesday, because the DXY, Euro USD and GBP USD correlation is not aligning how I wanted it to align. So on Wednesday also there was GBP CPI, so I just didn't took the trade. Simple as that. I didn't took the trade on GBP USD. Wednesday was a no trade day for me, and Wednesday literally closed as a bearish candle. As you can see, Euro USD was clearly bearish, and if I traded Euro USD on this day, I can guarantee you for a fact I would have taken a win right there. And now DXY closed as a bullish candle, kind of bullish candle, but it is not also a bullish candle, man. There was a fair value gap, the price went up, filled up the fair value gap, and then rejected. This week is a rejection, and this is more like of a doji to me than a bullish candle. But obviously I align it with the GBP USD. GBP USD has a fair value gap to fill, so now on Thursday I anticipated to fill up this fair value gap, and also it's looking like a bearish candle. And if I confirm the bias going to Euro USD is also looking like a bearish candle, so that is why I was looking for sells on Thursday. So if I'm looking for sells, I would look for some sort of change of characters to the downside. You can argue the price went up, swept the previous week high, the price went up again on Wednesday, swept this high, and then an impulsive change of character happened to the downside. But this change of character is technically not the change of character, because the price is still ranging between this higher low and higher high, and the price is still bullish until and unless the price body closes above the high or above the low, right? So until now the price hasn't body closed above the high or low, so I didn't consider this as a change of character in this case. So trading this would have been tricky, but obviously I don't predict, I adapt. So I was looking for a sell on this day. So if I'm looking for a sell, I will look for supply zone. You guys know the drill by now. And there was a beautiful supply zone on M15 time frame right here, which was made in New York session. The supply zones and demand zones, the auto blocks made in New York and London session are high probability, right? We know that. So on the New York session there was a beautiful supply zone made here. The price went up, literally perfect setup. The Asian high got swept, the point of interest got mitigated, accumulation, the price accumulated on Asian range, manipulated, and then we anticipated a distribution move to the downside to fill up the fair value gap. So this trade was a good trade, to be honest. I would have taken this trade any day, to be honest. This was more of a M5 change of character trade, and I entered at the equilibrium level. And the only problem with this trade was this didn't happen at our time window. Our time window was 12:30 a.m. 12:30 p.m. Indian Standard Time, because the daylight savings are now off. because it is the time of the year when the daylight savings are off, right? So if this Asian range got swept at our timing, which is 7 a.m. UK time, and then a change of character happened impulsively like this, and then we could have entered, and that would have been an A-class setup. This is not an A-class setup, just on the fact that this change of character, this Asian range liquidity got swept not in our timing. That is exact reason why this was not a class and A-class setup. This was a B setup. But to be honest, I believe that I would have taken this trade any day, because it was so clean. And also Rob Dono said that even if the Asian high or Asian low, according to your bias, higher time frame bias, is getting swept not in our timing or a little bit earlier than our timing, we can still trade that, and it has a profitable edge. So Thursday was just a losing day. As you can see, losing is part of the game. Thursday was just a losing day, and I totally accept losses, because if you don't, you can't be a profitable trader. Because every single profitable trader, even Warren Buffett, make losses in the market, man. Who are you, mate? Right? One loss doesn't determine your trading career. One win doesn't determine your trading career. What determines your trading career is consistently following your trading plan, following your trading rules, and showing up every single day without miss. That is how you build discipline and succeed in anything, in any realm of human endeavor, right? So now Thursday was a clearly bullish day, and I was looking for sell. I was totally wrong. My bias was wrong. My point of interest didn't get respected. The time window was not that correct, and maybe I could have avoided this loss if I stick to my plan, but I didn't. As in, like, due to I'm backtesting, I've just tried it and it didn't work in my favor, and that's totally fine. So now, according to how this Thursday candle close on Friday, I'm looking for a buy on GBP USD, and on DXY I'm looking for a sell, because of how this Thursday candle closed right here. And this candle was also, I told you, the daily bias was also not clear on going on Thursday. So whenever the daily bias is not clear on DXY and GBP USD, trade EU or don't trade anything. Simple as that. So now going on Friday, I'm looking for buys, and I didn't trade it Friday. Why? I decided to not trade Friday because of the news, man. Retail sales, GBP retail sales, whole day there was news, GBP USD, Euro USD, and whenever there is whole day PMI news, it's not worth the risk. So I just didn't took the trade. And if I took the trade, maybe it would have been a loss because of how this candle closed right here. And on Friday my setup didn't appear. When I was backtesting, I watched what happened on Friday, and my setup didn't appear on Friday, so I didn't do the trade. Simple as that. So this was the weekly breakdown, and my bias going on to the week was bullish. So what I anticipated Monday, Tuesday to went down and then gave us the move, right? The weekly profiling, exactly that happened. Monday went up, you can see right here. The weekly profiling does work. This was a daily expansion. Monday went up, Tuesday, Wednesday went down, made the low of the week, swept some liquidity from Monday and Tuesday to the downside, and then Thursday went up, and then Friday was a reversal day, right? As we know. So weekly profiling does work, and add weekly profiling, SMTs, and H4 draw liquidities, fair value gaps in your trading, according to Rob Dono's video I've watched yesterday. And yeah, just believe in your strat.